All of our DFX partners, DFX Group Partners. This is our weekly training that we're going to be doing as part of the process to help you become successful. Let's go ahead and get started because I know that your time is precious. So, listen, guys, I was talking with Ramona, who's our director of partnerships, right? Michael and Jean, who are on our underwriting team and help with structuring the deals. There's a lot of partners that are starting to come in. And this is really, really exciting, okay? There are people that are coming in from all different industries. We work directly with banks. We're working with people in the credit repair industry. We're working with clients and taxes, attorneys. It's a very, very exciting time to come into DFX as a partner. Commissions are high, and we're going to do a lot of the work here. So I know, guys, it's not simple to get new clients, especially if you are new coming into the industry, if you're new coming into working with small businesses, but you're very interested in it. And especially if you're going to be working from home, right? And you're not going to be necessarily out there. You may have some challenges with, all right, well, how do I do this, Dominique? I've talked, or I have these conversations every week. And I want you guys to just know that you have all of the training, all of the resources in your back portal that we have set up for you. And it is so you get to see everything real time with your clients that you're submitting. But I encourage you to come on as a partner to leverage the platform because 2024 is an exciting opportunity. We've got over 80 lenders on the platform that we work with. And it's just an exciting time to be helping businesses, right? Um, you know, a lot of our partners who are coming in will say, more and more people come back. They realize that they need the money, right? Renewals. Um, we know that there are people in the community and a lot of our clients who are making a decent amount of money. But one thing, and then there are clients who are having some challenges, right? Or startups that are just growing. No matter where they're at in their business or where you're at in your business, um, one thing is for certain that everybody's talking about, and they're talking about the challenges that they're having, the issues that they're having, the economy, right? How hard it is right now that traditional banks are getting much stricter. So most of the people in your community and my community have small businesses, right? They're trying to do things like make payroll. They're trying to do things like get inventory, get discounts on bulk inventory so they can flip it, right? They're trying to get second locations, or maybe they're trying to reduce, right, from 3 to 2 to 1 location. So no matter what the situation is, we know that small businesses are vital to the economy and we can step in and really help them. So to all of our partners, I just want to say, I really appreciate everything that you guys do. I know exactly what you do. It just blows me away. So we are putting together strategies for you that I didn't have when I first started. And it's a really exciting time, like I said, to be a part of DFX. So make sure you're coming in, make sure that you are joining and you're scheduling an opportunity to meet with us because we want to sit down and talk with you. So, guys, what we're going to talk about today, we're going to go over our best industries and then the cost of funds. Okay. So, let's talk about construction first. Okay. It's a beautiful time of the year if you stepped outside. I'm in California, it's gorgeous outside. And there's a lot of construction going on. All right. There's different industries, whether you're in plumbing, electrician, if you're paving, home building, um, excuse me, HVAC, right? There's a lot going on in the construction industry. So I really want you guys to concentrate on this list of 10. And I'm going to go ahead and share my screen here. Boom, here we go. All right. So let's talk about this list of 10. Because use of funds is one of the things that we ask, is a major thing that we ask when we're talking with clients, right? It can be way more important than the cost of funds. Okay, one issue that I can tell you for businesses is them not being able to get their hands on working capital. And you can say what you want, guys, but it's not easy. All right, you can't go to the bank, and you can't just go to the bank and get it out, especially if you're experiencing some challenge, or maybe you have some your financials need some work, or maybe you've already received the amount of capital that they're willing to extend, right? Or maybe they just don't even lend in your industry, right? Family and friends might not even be an option in some cases, especially for certain demographics, right? BIPOC groups, minority owned groups that don't really have, especially Black owned businesses that didn't really have that generational wealth component or assets, right? That maybe some other demographics might have. That's just statistics that we know, right? So in most small businesses, they might even have bruised or banged up credit. They might, because why? They might have put their name on everything, right? When you're just starting your business, what are you using? Probably your personal, especially if you don't have any assets, right? And we talk about, ways to stay away from that, or well, to separate liability when you're first starting, right? So even if you and then if we have business owners that are not necessarily paying their bills, or ones that do pay their bills on time, whatever the situation is, every situation is unique, right? But one thing that every business does have in common is at some point they all need capital. So the main thing when we're talking to businesses, we're engaging with them, we really want to have a good understanding that they have a legitimate reason, right? A legitimate reason for needing the funds, and that they've got good use of those funds, because when you have good use of the funds, and the cost of funds isn't necessarily really a factor, especially when you have an opportunity out there. So let's just go over some of the offers that we're working on right now, guys. Let me pull this up. So this is the use of funds, working capital. All right, so let's talk about this daycare center that we're working with right now. It's a child care center, right? They're offering their services are for kids that are 3 months to 6 years. They have 3 locations. They've got revenues of $742,000 in 2022, $3,730,392 in 2023, and they're projecting $3.9 million in 2024. They want to consolidate, guys, 2 of their locations, better space, lower rent. So we're arranging for a build out of the new location through SBA. We expect that to fund within 60 days. And in the meantime, she needs a bridge loan to cover the initial contractor's cost. So she needs a bridge loan up to 100,000, right? And she's going to use her PG. Her PG in this case is in the upper 800s, right? So we were able to come back with an offer for 101,000 with one of our lenders at 1.22 factor. Not all of our lenders use a factor rate. This one does. So she's essentially going to be end up paying back 123,220. All right, guys. So that's just an example of one of the offers that we're working on, and I want to go over another one too, because I think it's really helpful to kind of put this in perspective, right? So this is a restaurant that we're working with. They're purchasing a second location, and the second location currently has a drive-through, right? But the purchase price of the location has all the equipment included in it. So this new location that they're doing, this is a business in California. They're expected to do really well. It's a real estate transaction with a 15-year ground lease. Okay, so guys, purchase price is 1.8 million on this. They put 700,000 down. They were looking for a $1 million loan secured by the property. Okay, so the offer that was extended to them, 1 million at 12 months, interest only. Okay, 18% of unpaid monthly. What does that mean? It means they're paying 1.5% a month, which is 18% a year in due at maturity. All right, so these are just two examples, and don't get thrown off if you're a business that's not generating 700,000, 800,000. That don't worry about that. Okay, we help clients that are generating $5,000 a month. Okay, and even if you're not there yet, I highly suggest you start establishing your business credit. Even if you are there, you should be establishing business credit as well. All right, so why am I going over this? Because when you look at that rate, when you look at the cost of funds, depending on the lender, depending on the terms, whenever whenever they want additional funding, right? If they want to renew, and they do renew, right? Then the lender can, depending on the lender, they can take the cost of funds that they're charging for the remainder of the balance. That can be waived sometimes, guys, depending on the borrower, depending on the request. So there's a lot of little nuances that these offers are really great for businesses, right? If they need inventory, if it's a retail, right, establishment, they can put a lot of the cost of funds into the selling of the product. And then with cost of funds, it could be tax deductible, right? So tell them to talk to their CPA in their state and see what they can do. So and then when I talk about, clients coming back for renewals, that's what this restaurant that I'm talking about. This client was actually, it first came because our partner first referred them over, and they helped them with getting their brother cigarette distribution company, right? Funding. They were actually referred over by the partner who came from a bank. Okay, so basically, because of the industry, they weren't able to get funding, so they were referred to our partners. And so basically, what we were able to do is help them with funding for their cigarette distribution company, and then they came back for expanding a Surf Pro franchise, and now they're branching out into the restaurant business, guys. Their first location did really well. Now they're doing the second location in California. So this is what I'm talking about when I say the opportunity and how it is really important. And if you've come to our partner meetings, you know about establishing, relationships with your community, with your small business community. So another one that we can talk about is there's a daycare center. Daycare center, they needed equipment. They were averaging about $20,000 a month. Okay. They had actually gone down a little bit. So we were able to get them a $25,000 offer through our partners over 8 months. And that was at a 1.4% rate. And you might be saying, wow, okay, 1.4 rate, right? You might be like, okay, that's a bit high, right? But the cost of funds and are a lot higher right now in our economy, right? That's, you just have to know that, right? Especially if you're watching the news. People may not pay. They might go out of business, right? So what you weighing your options, right? And why is the cost high? Because the risk is high, right? These are riskier borrowers. So the person I encourage our clients to look at, what am I going to do with this? Am I going to put this to use? What can this playground do for me if I get this equipment? Am I going to be able to put another dozen kids in my daycare for a week? So that would be a great use of capital, right? And so I want to encourage you guys to be thinking about these when you're out there. And we get a lot of questions about, the trucking industry, transportation. It can be difficult to get 100% offer on transportation, just full transparency, if they're doing, unless they're doing like 100,000, 200,000 a month in revenue, right? Because trucking can be very volatile. The truck breaks down, right? Revenue could be cut in half or even down to zero, guys. So we've worked with trucking companies who, the cost of funds is irrelevant to them because they're losing money every single day if they don't get that truck that they need on the street, right? So I just wanted to go over that with you guys. And then let me stop sharing here. All right. So wanted to go over that with you guys because as we expand and as we grow, we'll be talking about the additional services that we can offer clients through the organization and through the platform. And I want you guys to know that what we're doing is we're informing, right? Creating impact, helping businesses understand that you're not selling. Okay, you're not selling a bunch of crap, right? With a organization, you're with an organization that loves small business, that is dedicated to creating impact, driving money into the economy, communities, promoting generational wealth, promoting small business ownership, because that is how you create economic mobility, right? So understand we're here to service businesses. We're here to service the community, okay? Because when you have a small business, here's what happens, guys. There's a small business helps the economy, okay? It helps the employees, helps the people around them. It fuels the economy, okay? And I don't know if you guys know this, but there's a $1.6 trillion revenue gap that's untapped, okay? That means opportunity. All right. So how is this beneficial for you? You're getting a commission, okay? So you're fueling your economy, your family environment, your business, what you're building. Okay. And then DFX Group, Domino FX Group is getting bigger and bigger. We're having a stronger client base, stronger partners, and we're just very excited. So anybody that has questions about funding, has questions about establishing your business, building your business credit, please reach out, and join the community, because there are many options. Even if your company is pre-revenue, right? Even if a client is pre-revenue, they absolutely need to start by establishing business credit. And we've got a great accelerator program with coaching and advising that utilizes an amazing software that really guides small businesses on how to access this financing through trade lines. You can get up to 50,000 within 6 months. So business trade, what's the benefit of that? It can fund up to 90% of your business expenses without having to over leverage your personal credit, your savings, and racking up a bunch of inquiries that actually stand in the way of getting loans, and things like that. So when you have established business credit, it can also help you get better rates, better terms, and build while you're building up to accessing those loans. So, all right, guys, that's it for today. Make sure that you are reaching out if you're interested in working with Domino FX Group, DFX, and leveraging our platform. And we will see you next time.